Welcome to this third quarter result presentation. We will also take a look at our strategy for the years 2015 to 2019. But starting with Q3 and looking at that, some of the highlights of Q3. The business environment is rather challenging at the moment. I feel, however, that we have made progress in many areas. The operating result, however, at the moment is not yet to our satisfaction. On the highlights, I would mention that throughout the third quarter, our sales increased every month, and in September, we actually recorded our all-time high sales. We also clearly started to see during the third quarter positive results from our investments in future growth. The operating result, as I mentioned, is not yet to our satisfaction. It is better than in Q2. The Q3 result was burdened by mainly three items. Firstly, we recorded slightly lower margins in the project personnel business area. I'd like to mention here that in a very dramatic dip in the Norwegian market, we have actually managed to grow there and gain market share, but at a slightly lower margin than in the previous year. The Q3 result was also burdened by continued investments in future growth and a few non-recurring items. We have already taken and will continue to take actions to reduce our costs, to increase our cost efficiency, and we will start to see the effects of that in the fourth quarter, and the full effect will be seen starting the beginning of 2015. To mention a few examples, we are reducing our rent costs significantly in Finland by consolidating our current 3 offices into 2 offices. We have reduced admin costs, admin personnel costs throughout the organization, and we are also reducing the costs for certain services that we have used to buy externally. Some of the other things that happened during Q3, a new group executive team was nominated in July, and one of the tasks that the new executive team has been busy with during Q3 is formulating the new strategy for the next 5 years. We will take a look at that later today. We have also taken the decision to minimize our presence in Australia. There's a number of large projects that we were aiming for in the Australian markets. These have practically all been either postponed or stopped, and therefore we have cut our presence in the Australian market to a minimum, also thereby minimizing our losses there. And our focused growth strategy has been issued today. Taking a look at some of the key figures, we see that the net sales overall grew compared to last year. Year to date, we're actually still only roughly on par with last year. But the trend is good. The operating result clearly lower than last year and not where we want to be. Headcount has increased slightly, and you may notice that it seems like the headcount has increased more than the year-to-date sales. In fact, if we look at the sales development in local currencies, the picture is slightly different. But here, in the graphical form, the sales per quarter, so compared to the third quarter of last year, a growth in euros of 2.3%. And you will see that the growth in local currencies is actually somewhat higher. The operating result we note that compared to the previous quarter, we have finally changed the direction and made a turn for the better. But compared to last year, as you can see, much lower. If we break up our sales by business area, we can see that, first of all, the growth in the business area project personnel continues at a fairly brisk level, 3% in euro, but actually 6.6% in local currency for the quarter and 8.7% for year to date. The consulting sales have not developed as well as the project personnel sales. Compared to last year, we've actually reduced the number of personnel significantly, both in Sweden and in Finland, and our Norwegian operation is growing slightly in terms of personnel. Overall growth for the quarter, 2.3% in euro and 5.9% in local currencies. So compared to Q3 of 2013, personnel growth less than 2%, and if you remember the growth in local currencies higher. So I think that's a reasonable ratio. The large number of our personnel is obviously the project personnel staff, who are partly, to a small extent, our own permanent employees. This is true for some 40 people in Norway. And the rest of the project personnel are temporary employees or independent contractors. And on average, during the quarter, we had 41% of the project personnel employees as independent contractors. Then a few other key figures. Balance sheet fairly strong. Our cash just under 8 million, and if you compare to last year, you may remember that in April of this year we paid out a dividend plus an extraordinary dividend, so the difference in cash comes mainly from that. Gearing still clearly in the negative, and Dovre Group is a net debt-free company, as you probably know. Looking ahead and looking into the future, right now we have a very challenging market situation. Globally speaking, if we think about our position, our main markets are in strong economies. Our largest market is Norway, our second largest market is Canada, and third largest market is in the US. So we're talking about fairly strong underlying economies. The oil and gas sector in Norway is in a significant dip, and yet we have been able to grow there, which I think is a good achievement. And we will definitely continue our strong focus on sales, not only in Norway but globally. Looking at project personnel, I think we are in a reasonably good position at the moment. We have managed to gain 3 important frame agreements during Q2 and Q3, which will start to give us business probably already this year to a small extent. We have a much stronger sales team in place than last year in project personnel, and I think overall we are well placed for continued growth in the project personnel business area. Looking at consulting, also there, I think we have a fairly good position. We have a particularly strong order stock in Norway, and also a reasonably good situation in the smaller business units in Finland and Sweden. And looking at our cost structure, we have, as I mentioned earlier, we have taken already measures which will improve our cost efficiency, and we will see the full effect of those starting in early 2015. And our guidance remains the same. We estimate that our full year sales will be between 95 and 105 million euro, and our operating result between 1 million and 2 million euro. I'd be happy to try to answer any questions that you may have at this moment.